Good morning. This is Larry McMillan with a stock market update on Monday, April 3rd. Welcome to the second quarter. The S&P index continues to plow ahead. It's up 6 days in the last 7, and it has climbed above the first resistance level, which was 40.80. So that's enough for us to remove our core bearish position. The SPX chart is not bullish yet. It really needs to climb above 4,200. Maybe even 4,300 to get a bullish status, but it's no longer in a bearish status. We will probably reinstate that core position, bearish position, if S&P fell back below 39.50. But right now, as you know, we've had a number of buy signals. We had even a couple of more this past week. And so those internal buy signals have been proven stronger than the SPX index itself. So just going over some of those, we have a McMillan volatility band buy signal, which is approaching its target, the target being the +4 standard deviation modified Bollinger Band, which right now is at about 41.45. The equity-only put-call ratios remain on buy signals. They continue to decline. And we've also had a buy signal from the total put-call ratio. That has a target of 41.50. Again, that's pretty close, so it's probably a little bit late to act on that signal. The breadth of the market has been astounding. 6 days in a row of positive breadth, and many of them very strong. So the breadth oscillators are on buy signals, and they're in overbought territory. Again, overbought does not mean sell, so we would have to wait for confirmed sell signals there. And in fact, they're so overbought that they could probably withstand a day or two of negative market breadth and still remain on those buy signals. New highs versus new lows. That indicator is in a neutral status right now. It had been on a sell signal, but that was stopped out last week. And so right now, we don't have a signal from this indicator. If new highs continue to expand on the New York Stock Exchange, we would eventually get a buy signal from this indicator. VIX has 2 buy signals operative right now, the VIX spike peak buy signal and the trend of VIX buy signal. So those are both positive. And what we normally do is, if we have spreads on, if the market rises to the higher strike in the spread, then we roll the spreads up. So we have been doing that in a couple of places as well. VIX is, though, down to 19 again, and every time it's gotten about this low in the last 15 months or so, the market has backed off, sometimes just a little bit, sometimes a lot more than a little bit. So that's a sign of caution. It's not necessarily a sell signal, but it is a sign of caution. There are also a bunch of small gaps on the S&P chart. It could fill those backing down to about 39.70. That would not change the fact that it's resumed a bullish stance of some sort, but as I said, falling below 39.50 would be pretty negative. So all in all, we're monitoring all of these indicators daily, and I invite you to visit our website, take a look at our daily newsletters. You might find some of those to be of interest. Meanwhile, have a great week trading.